you're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the entire trading setup, market strategies for the day, and everything that the top market masters are actually watching out for as we enter the new Samvat in the next week as well. Now, remember, we'll start off with a weekly expiry wrap that we had yesterday. The Nifty had started on the positive note, led by the global positive news that we had been getting, but quickly they lost momentum, failing to surpass last week's highs as well. Selling pressure emerged quite early on itself, with the index slipping below the previous two sessions' lows. Now, what is the trading setup like? Overnight in the US, what we've seen is that the Wall Street's major indices, they settled on a mixed note on Tuesday as investors weighed mostly the upbeat quarterly earnings from major US banks, comments from Federal Reserve Chair Jerome Powell, and the escalating US-China trade tensions continuously. So S&P 500 slipped by 0.1%, the tech-heavy Nasdaq fell by 0.7%. In contrast, it was the Dow Jones Industrial Average that managed a 0.4% gain. Now, what we've also seen is that the foreign institutional investors, they've continued to remain net sellers yet again. Upwards of 1,059 crore rupees is what they've sold yesterday. DIIs, they net bought stocks worth about 3,024 crore rupees in yesterday's trading session. This morning, what's happened on the Asia Pacific region is that they've been trading largely higher, defying the Wall Street's declines following renewed trade tensions between US and China. Remember, this rebound has also come in after US President Donald Trump has threatened retribution against China on Tuesday, including a possibility of a cooking oil embargo too. So keep an eye out on that front. We've seen Japan's Nikkei gain about 0.3%. And also Australia's index, up by about 0.9%. The ASX 200, South Korea's Kospi also climbed by about 0.8% in trade. So all across the Asia markets, we are seeing a green screen. The GIFT Nifty is also indicative of a positive start of upwards of 65 odd points in today's trade and at around 25,274. We'll see how things pan out over the next 6 minutes. And after that, the pre-open will hit the street. But of course, today again, we have a lot of news flows to really track, especially on the earnings front. More IT numbers that have come in as of yesterday. Tech Mahindra, Persistent Systems, they will be reporting and reacting to the earnings. And what we will see is that Thyrocare, Science, DLM, they will be also the ones that will react to their earnings as well. Even Nifty Bank will be in focus today as Axis Bank becomes the first major lender. That is results also to come in from have come in from HDFC group of companies, HDB Financial, HDFC AMC, and HDFC Life Insurance as well. So the entire HDFC group will be in focus as well. Apart from this, we will also look at IRFC, KI Industries, Oberoi Realty, L&T Finance, MRPL. All of these results will also be in focus throughout the course of the session today. But let's actually welcome our guest on board first to take his view. We have Mr. Gaurang Shah joining in, Senior Vice President of Geojit Investments. Warm welcome to you, sir. Good morning and good to have you with us as always, week on week. First up, season's greetings to you for upcoming Diwali festivities. But I want to kickstart by asking you, why do you think is the spark really missing from the street as of now? What do you think will bring it back?
Well, thank you so much, Sakshi, for having me on the show. Good morning to you and to all the viewers of Business Today Television. A small disclosure before we go any further, that all recommendations on this show with you this morning are a part of our research team recommendation. Our company, Geojit or I, we do not have any personal investment, no financial interest, no conflict of interest either, but we give advice to our clients on similar lines. They might hold the position. So my sense, Sakshi, is that I think it is good to see this, breather that we saw on Monday, that is, because that small correction that we saw, or a adjustment, whatever you want to call it, was after a very decent rally of almost about a week or 10 days. And of course, after seeing that, we did correct a little bit yesterday. We are trying to take off 25,250, 25,300, 350 decisively. And I think today, tomorrow, if we are able to cross over, it's not going to be immediately, but maybe about a couple of days, supported by Q2 earnings, Sakshi. And if we are able to take off 25,300, 25,350, then I think move towards 25,500 and beyond cannot be ruled out. The biggest trigger for this, as I mentioned, is going to be the second earnings, because first of all, I think there was a very little hope in terms of earnings. There were a lot of people on the street who were expecting a degrowth or a downgrade in second quarter. But very few have come up with earnings on the second quarter. Whatever we have seen up till now, Sakshi, the good part is that there is no big disappointment, especially with the IT sector. A lot of people were going into second earnings that IT is going to be a disaster. But again, over there, I think numbers are not all that bad or ugly that street would have got scared. And my sense is that resolution on the global front will possibly be a big positive. You were mentioning about US, China, Trump and Xi Jinping. My take on this entire thing is that if in case on 1st of November, as it is mentioned by President Trump, if 100%, 130% tariff is implemented on China, long run it's going to be benefit India.
Got that. So we'll keep an eye out on both the global as well as the domestic cues at this point. You talked about briefly on the earnings. We've had yesterday Tech Mahindra and Persistent Systems earnings. Of course, you did mention that whatever earnings have come out, at least the big part is that no disappointments as such or no big negative surprises, and that gives us a little bit of comfort. But out of the 2 or 3 major numbers that we've got from the IT pack, has anything stood out for you in terms of a highlight or any sign of green shoot emerging, earnings bottoming out for sure? And especially because this sector, the IT sector, has largely been an underperforming one this entire year. And of course, led by all the headwinds that we've discussed through the course of the year with you also. Now, do you think these earnings or anything in the commentary points out to the fact that maybe the next quarter onwards, we should be seeing a pickup take place, and therefore it may be the right time to look at the IT sector now?
So I don't know about immediately next 3 months, 6 months, actually, because I don't look at short to medium term. I look at long term. And for IT, given the headwinds, like I said, despite of this headwinds, I think IT sector has delivered some decent numbers. They are not ugly at all, or they were not below expectation. That was a good part. Whether to look at IT or not, well, I think Geojit and myself, one of the few people who maintained a positive stance on IT, even when the entire street had written an obituary on the IT sector, and most of them said that stay away, there is nothing left. AI, Gen AI, complex AI is going to take over. These companies are going to go for a toss. Fast forward to the current situation, I think we all know what announcements were made by TCS, by HCL Tech, likewise Tech Mahindra, Persistence, and whatever companies are going to come out with respect to data centers and AI. So my take on the IT as a brokerage house, Geojit Investments remains extremely positive. Only problem is, what is your time horizon? If you have 1.5 year plus kind of time horizon, valuation at which levels the IT sector companies are trading at, they're looking very attractive. It's your call which side you want to be, short term, medium term, or long term to have a larger benefit.
Okay, the markets have started to tick, and this seems to be a negative start, at least in the first pre-open tick. 24,815 is what we have, 1.3% lower. But I hope that this should improve for the better during the course of the session. A 300 point of a down tick was nowhere being seen on the GIFT Nifty as well. So let's hope that this improves as the pre-open trade settles down by 9:08 or so, and we'll come back to it, and hopefully we'll see a more sensible number to look at this point in time too. Mr. Shah, coming back to you, when it comes to the entire earnings season that is to pan out, have you penciled in any sectors that could be in for an upgrade, any key segments that you believe there could be outperforming in this entire sector, in this entire season?
Not only for this earnings, Sakshi, but I think first of all, I'm so sorry, Sakshi. I don't know whether we'll meet next week. We'll meet at this time. No, even we have a holiday. So, first of all, Diwali greetings and prosperous new Samvat to all the viewers of Business Today Television, to you and to entire team. May Ma Lakshmi shower best of her blessings on all of y'all, and health of God keeps your health perfectly in good shape and in pink.
Thank you so much. Thank you.
I'm sorry. I just slipped my mind. So Sectorially speaking, Sakshi, I think if I have to speak from say from this Samvat to next Samvat, that is 1 year or maybe a little bit more extended time horizon.
Sure.
Uh, I have penciled down some six sectors,
Okay.
and those are defense, consumption, banking and finance, that is the entire BFSI segment, capital market related stocks, power, cement, and autos. This is a broad universe in which I think my humble request to all your viewers would be that start nibbling into with the large cap first and then some select mid caps and create a portfolio within this universe of six sectors. I don't think you will get disappointed from a long term point of view.
Fantastic. So six sectors and the strategy to start investing in them, accumulating the stocks, starting with large caps and then select mid caps for the long term. Six key sectors over the next Samvat year that you could be building on your portfolio in, and you will not be disappointed over the next long term. We will also try to eke out some more names from Gaurangji, over the course of our next half an hour conversation for all of you to note down your Diwali specific picks, because a lot of you definitely form your own portfolios, rejig them as per the market experts' takes as well. But let me first ask Mr. Gaurang Shah on the primary market space that has been recently quite a bit in action. We've seen what happened with LG Electronics yesterday, a 50% premium. Cooled off a tad bit, but the India counterpart has already surpassed the Korean counterpart in terms of market capitalization. We've seen the euphoria in the IPO subscriptions, and that actually translated, which is a rarity with this kind of a performance for large IPOs of upwards of 10,000 odd crore rupees. Now, the big question is, will this sustain? And of course, how do we compare it with a Tata Capital that just had a minor listing on the upward side, and then has cooled off below the issue price as well? Mr. Shah, how are you looking at these IPO stocks that got recently listed, and what's attracting your attention in this space, sir?
So, Sakshi, from the recent series of IPOs, we had coverage on three of them. One of them has already got listed, and I think two of them, I think the subscription is still open. My desktop is giving me some trouble this morning. It is a little bit slow. But yeah, as a disclosure, we had a subscribe recommendation to LG Electronics. We have a subscribe recommendation on Canara Robeco Asset Management Company.
Okay.
We have a subscribe recommendation on Canara HSBC Life Insurance. All these are from a long-term point of view, and I was quite satisfied with the kind of listing that we saw for LG Electronics. My only request to all your viewers again is, nowadays investors are also become punters in IPO. They look at only listing A. Sakshi, this is a sad part. Not all IPOs will give you the kind of return that you anticipate. You need to be realistic and have a very, neutral approach when you invest in IPOs. First of all, understand what the company is. There are a lot of platforms where you get to know what IPO, what's the ranking, what's the risk factor, excuse me, management, product, valuation wise, you get a lot of clarity. Well, please take some trouble and go through it. It's available on a click of a button. I think everybody has got a smartphone. Log into any decent website and you will get to know what that IPO is all about. Don't treat each and every IPO with a single thumb rule as listing it. Businesses are different, valuations are different, management is different, product services are different. Treating everything with a single thumb rule of listing it is not a wise decision. You may end up burning your finger. But again, long term, be very choosy. I think that is the order of the day. And my sense is that going into the next Samvat also, Sakshi, you are going to see a flurry of IPOs coming in. And by the way, there was a lot of concern that secondary market liquidity will be sucked out and put into primary market.
Yes.
Nothing of that sort has happened. Secondary market is doing good, primary is also doing good.
Secondary market is doing good, and primary will also continue to do well in the new Samvat as well. There will be a lot of listings, but definitely use your wisdom when you are going ahead, like Mr. Shah has pointed out, as to how to select choose a few stocks from the IPO basket that definitely suit your portfolio and don't participate in the frenzy that usually exists as well. So that's a word of caution that's coming in there. Mr. Shah, the other space is, of course, how can we forget talking about gold and silver? You've been marking out on our channel week on week. To all our viewers, go and visit at any given point in time your next door jewelers, your family jewelers, and get some gold for yourself. And gold has listened to you, and it has really reached to a dizzying point at this point in time. And there is no stopping this kind of a rally that we are seeing. Silver has outperformed. Silver has surprised most of us over the last 1 month how it has shot up, and there's a domestic shortage of sorts. And we are seeing even a difference between international silver, domestic silver, with ETFs penciling a higher premium. Most of the ETFs have stopped taking any lump sum of fresh SIPs at this stage in time, just to protect the interest of the investors as well. What are you making of this stupendous rally? 47 records, I'm given to understand, for gold this year alone.
Well, so gold has not listened to me. It's the kripa of Lord Almighty that gave me wisdom to understand gold from 2007, 2008. So Sakshi, honestly, I think it has given 50% return this year, if I'm not mistaken, year to date, if you actually go to see. And over the last 2 years, again, a phenomenal. And remember one thing, gold, silver, these are some precious metals which a lot of people believe that they are, useless asset classes. I beg to differ. And I'm glad that there are critics around, for which I become more confident on my opinion and my outlook on gold, to be very honest. I thank them for their criticism. I still remain positive from a long-term point of view, Sakshi. I'm not talking about short-term. Look, because the gold and silver prices, even platinum, by the way, platinum is one of the outperforming ones, Sakshi.
Last time,
yeah.
Yes.
All these three precious metals are going to do well. Because of the run-up, maybe you might get some correction. And by the way, people are scared to sell. People are scared to short also this precious metal because of the crazy run-up that these. And then there is in case if you go short, forget it. If you have a position, you want to book profit, you want to sell it, that's a different point of view. But if you want to go short, God bless you, and keep your stop losses very, very tight, because you don't want to, take a call against a trend. Over a longer period of time, what I have been hearing, there are great gurus in the world who give this gyan about gold, silver and platinum. The view is that it is likely to go up further. Maybe because of some global political situations getting resolved, or maybe because of some, overhead feeling, or a, top heavy feeling, you might get profit booking. But if you are a 3-year, 5-year plus kind of an investor, I will still say that you have not missed the bus. Go and take a step forward. Step out. Don't take a step back. And there are a lot of products. Don't go and buy physical gold if you don't want to buy. You have gold ETFs, silver ETFs, you have got gold mutual fund, you have got silver mutual fund. Some fund of fund have stopped taking new funds because they feel it is, the premium has gone up much more in the domestic market. But long term, I still remain positive.
Long term, you still remain positive on gold, silver and platinum at this point in time, viewers. And of course, like Gaurang Ji has mentioned, that these asset classes are essential for your investment portfolio at all times. Whether or not they are in flavor or not, these are essential assets that you must definitely have some exposure to in your investment portfolio too. Let's also talk about some of the other spaces. Gaurang Ji, in the last couple of weeks, our entire focus was on the consumption-oriented sectors, especially with the GST push that the government had led to. And we have witnessed at least some of the sectors reflect that GST cut benefit in the stock prices momentum as well. Auto ancillaries have moved up. We've also seen some momentum in the retail space, consumer durables, FMCG too. I want to understand from you, is most of the good news already in the price, or do you think the rally can sustain when the actual reflection is seen in Q2 earnings, in Q3 earnings, and even beyond? And therefore, how should one be really looking at these sectors now?
So Sakshi, let us understand one thing. I think the misconception that most of the people had on the street. Don't know whether they are inexperienced or naive, but from 22nd of September, when the announcement was made of new avatar of GST 2.0, people started asking question, second quarter में कैसा रहेगा, बहुत अच्छा number आएगा. I said, bro, it's not going to work like that. It is not that from 22nd of September GST got implemented and on 23rd of September these companies, FMCG companies or consumer discretionary, consumer non-discretionary will ripple twofold, threefold, fivefold jump on top line and equally on the bottom line. These things take time to sip into ground, and then after seeping at ground level give you green shoots in terms of indicators that yes, consumption is actually going up. I mentioned at that point of time, Sakshi, that October, November, December is the time when you will start witnessing these green shoots at ground level. And from next financial year, forget not only because of these GST changes, because of good monsoon, semi-urban, rural India will go up, demand will go up, because of budget tax cut and 12.75 lakhs, that will also start looking positive. And I have also mentioned one thing, that this is not the full stop for the government, Sakshi. Government is going to be proactive in terms of newer policies, giving support to consumption, giving push to the GDP, making India the center for the world, and of course, changing policies accordingly. So we still remain positive on the entire consumption theme, whether it is discretionary or non-discretionary. It will take time, but it will definitely have a positive effect.
Okay, fair point. What about some of the sectors that we must now look at, because of we were talking about precious metals, but metals also have started to move up a little. Do you think that precious metal rally will now flow into the hard metals as well, sir? Do you think some of that structural move is now getting penciled into the metals?
So metals actually will, like I mentioned, both ferrous, non-ferrous will do well.
Yes.
The only problem is that, this news flow from US, China, oversupply in China, stroke dumping into other countries from China. And India happens to be the most sitting duck for these countries to come and dump. But the government has become proactive. So you have time and again anti-dumping duty, you have import price revision, to take care of the domestic players. So, and of course, you should have at least 2 years, 2.5 year plus kind of time horizon if you eventually understand and if you decide to invest in metal. So, Tata Steel, JSW Steel, Hindustan Zinc, NMDC, Hindalco, Vedanta, these are the names on which we are having a positive view. And my sense is that, some of the mining companies also will do well because of the focus of this rare earth minerals and magnets, the issue that has been created by China. Of course, we've given a little bit of benefit by China, but the government is also giving a huge push for self-reliance.
Okay, let's focus our attention on the market opening. Viewers, much better than what the pre-open first tick was indicating. 25,200 is with us, 0.3% higher, 73 point of a jump on the Nifty right at the start of the session right now, and it is gathering some more pace at this point. Let's pull up the Nifty Bank to see how that one is taking higher, almost in tandem with the Nifty. 0.3% up, 56,665 is the level at which the Nifty Bank is trading at as well. Let's also pull up the IT sector that we must focus on, about 0.25% higher in trade, right after some more numbers have started to trickle in for the markets, and we are seeing some other sectors also pull up in trade. Even the broader markets that had actually seen some weakness in yesterday's trade across the broad line of sell-off that we had seen, mid caps and small caps are also opening a tad higher in trade. Advances are higher to declines, 1,087 advances at this point on the NSE, vis-a-vis the lower declines at this point. More stocks in the positive zone. We have Tata Motors that is hovering up in trade. We have Adani Enterprises, we have Geo Finance, we have Indigo, HCL Tech that's pulling up higher, BEL, Bharti Airtel among those gainers. You also have Eicher, Reliance Industries as the movers in trade. Maruti is higher, Bajaj Auto is higher. Hyundai also we should definitely be focusing on. It's an important day for Hyundai. We will be discussing that over the next few years, Hyundai is going to be doubling down on India in terms of investments, and that's what we should focus on. On the banking names, you have IDFC First Bank, Bank of Baroda, AU Small Finance Bank, that's also among the top movers there, within the gainers. In the first trade, we also have moves that are being seen across FMCG names like HUL. You have Asian Paints from the consumption basket that's also taking higher. But let's pull up Tech Mahindra and Persistent Systems. Tech Mahindra is starting lower, 1.5% lower post the earnings. We're also looking at Thyrocare, however, which is opening 10% higher in trade, 1400 levels. Very strong move coming in on that front. Tata Communications is also higher by about 5 to 6% up in trade today. Let's also pull up Persistent. That also came into focus, 3.5% higher. So that one is reflecting a positive move there. So some of those earnings that are getting a reaction on the positive side are Persistent, and that we are seeing on the positive end. And we are also looking at others like Cyient DLM. Let's pull up that one too. Let's also pull up LG Electronics, because it's day 2 and we must mark out that stock as well. We'll see how that one is also opening in trade. LG is opening about 1.5% higher at 1716. Continuing move on the day 2. Let's pull up Cyient DLM. Remember, the revenues were down, yes, in the results about 20 odd percent. Net profit came in, however, higher at 32 odd crores. EBITDA was down by 1%. Margins came in higher at 10%. That's also in focus. And apart from that, Thyrocare Technologies, the Q2 earnings are definitely getting into the price now. 22% uptick for revenues, and we have seen 81% jump on the net profit figure. That's led to a double-digit move on Thyrocare as well. We have some other names like ICICI Lombard also opening higher. Remember, amidst the earnings move that we've been seeing, a 4.7% move on the higher end. So definitely the markets are rewarding the stocks that have reacted positively, that have reported positive results. ICICI Pru, however, is starting lower, 1.1% lower. Tech Mahindra reducing its opening losses now, 0.5% lower in trade at this point in time. Gaurang ji, how do you see the market opening and some of these earnings reactions that we are seeing at this point?
So I think it's been just a while. Like I mentioned, Sakshi, I think for me, I think now 25,250 or 25,275 is in the bag. 25,350 is the next level, which I am keenly watching out for. We've been there a couple of times. Unfortunately, we could not cross over and give a close above that. So my next target is going to be on the Nifty spot, 25,350. And I think if we give a close above that, then like I mentioned, a move towards 25,500. And if that is in the bag, then I think the next level we should watch out for is 25,800. It's not going to be immediately. I think I'm glad that market is giving its time to build a base. So once this base is in its place, I think we'll definitely move towards that.
Okay. Any call on Thyrocare Technologies, sir? With this smart move that we are seeing, will this sustain, or is this just to be seen as a knee-jerk earnings positive move?
So I think it's basically on back of earnings. We like this we like the diagnostic sector. And we have formed it a part of the entire pharma stroke healthcare stroke diagnostics, because all three are interconnected to each other. You can't look at it separately. That's what my personal viewpoint is. So we positive on this diagnostic sector. One company that we have a positive coverage is on Dr. Lal Path Labs.
Okay.
And my sense is that, these companies should do well.
Okay. What about the, healthcare hospital space as well, sir? Apart from diagnostics, are you looking at that as well? And from the frontline pharma, what's your view?
So from frontline pharma, Sakshi, Cipla, Sun Pharma, from the mid-cap universe, Glenmark Pharma, Gland Pharma, Aurobindo Pharma, Natco Pharma. These are some of the pharma names on which we are, and of course, Zydus Wellness, Zydus Life, both. On hospitals that you mentioned, three names. And first one is, of course, Apollo being the large cap boy in the space and have tremendous growth potential. Then we have Fortis Healthcare. And recently we added one more company, and that's called Max Healthcare. These would do well. There is one more company which is goes by the name of Krishna Institute of Medical Science. This is also something that we are positive on.
Okay, got that. So we'll keep an eye out on this entire pharma space as well. All right, Gaurangji, let's focus our attention on the auto space. This is also one of the sectors that you marked out for our viewers that you are positive on over the next Samvat as well, and there will be a lot of opportunities for investors to add. What's your take here in terms of the key stocks that you're looking at for outperformance? If you could also give your view on Hyundai Motor as well, today being an important day because the company is now talking about its over the next 5 year plan. What they've suggested is that 45,000 odd crore rupees will actually be invested in various product developments and, of course, launching about 25 new electric vehicles as well from the company too. So there's a lot of focus back in India from Hyundai Motor after getting listed yet again. In the EV space, off late, we've been seeing a lot of competition. How is that going to play out for the company and for the entire sector, if you could also give a view?
Well, so I think we have got huge lineup coming through launches, not only in this year but also next year. Because of the changes in the GST tax bracket, I think affordability has gone to the next level. Competitiveness in terms of export market is also much better now. Uh, uh, my sense is that across the board you will see performance coming through. But the first visible performance is going to be on two-wheelers, especially the entry-level two-wheelers and entry-level four-wheelers. And then, of course, the move will come on to the mid and high segment vehicles offering that these companies have. I've been remain positive on. If I have to pick one from each, of course, we've got coverage on many stocks. But if I have to pick one from two-wheeler, then it's going to be TVS Motors. If I have to pick one from four-wheelers and commercial vehicle, then it's going to be Mahindra and Mahindra, M&M. If I have to pick from a pure commercial vehicle play, then there are two names. One is, of course, pure commercial vehicle, that is Ashok Leyland, and a mix of commercial vehicle JV with Volvo and two-wheeler high-end premium, that's Eicher Motors.
Okay, got that. I hope this is also given an understanding of how to go about selecting a few stocks there from the auto basket. So, what about Ola Electric? How are you looking at that? The company is, of course, talking about foray into energy storage systems, and has been foraying into a lot of launches, new launches as well. But in the past, we have seen a lot of troubles that the company has also faced with, of course, safety, security concerns too. How would you look at Ola Electric at this point, sir?
Where is the customer satisfaction, Sakshi? There are growing number of complaints against this company and their product. Their service centers are unable to keep up or deliver the kind of service. The numbers that they reported as far as sales number or registration, that was also, I think, not up to the mark. And I think the Vahan website had a different number compared to what the company was talking about. So while you can talk about, things, what matters is the number, what you deliver. We have not covered Ola as a standalone fundamental coverage. Of course, when the IPO was there, we had covered it, but currently we don't have any coverage. And my sense is that there are better, bigger, established players to look at with a combination of EV two-wheeler and petrol-driven two-wheeler. So that's a better combination. I mean, and they are established. They've proven that track record. You don't have complaints from customers the way you have a number of complaints against Ola. You don't have that kind of numbers for Bajaj, TVS, Hero, or Eicher, as a matter of fact. So, I mean, why you want to unnecessary acid test yourself? Go for larger names. There are better players to look at.
Okay. One more sector that I actually forgot to ask you is that something that developed yesterday and wasn't clear focus, and that's Google investing 87,000 odd crores in the AI data center in Vishakhapatnam, and how after themes like semiconductors, AI. Now data centers are being seen as the next key, opportunity that investors are looking out for. Even yesterday on our daily calls show, there were so many questions that came in onto helping viewers understanding any data center focused stocks that we have that one can actually look at too. How are you looking at these newer themes, newer investments and technologies focus that the government has had now for some time, and global tech giants are now focusing on building in India too? Do you think this will develop into a core theme that investors can look at? And any key stocks do we already have, or do you think the big tech firms will only be in the front line here?
So, Sakshi, I think this entire, first of all, we have this habit of over expectation and overbuilding our enthusiasm towards this. While the fact of the matter is that yes, all these things, whether it is semiconductor, whether it is chips, whether it is PCBs, whether it is going to be data centers, whether it is going to be defense, all this is going to play out over a period of time. Even Google setting up data center, and I think it's in Visakhapatnam, if I'm not mistaken.
Yes, yes.
It's going to take time. It's not going to midget. So your question with respect to data centers amongst the large cap listed players, there are names where we have coverage. So you have Tata Communication, you have Bharti Airtel, you have Reliance, L&T, you have ABB. These are established players who already have a certain amount of data centers, and they are planning to increase their presence. As far as the entire semiconductor, though you've not asked me that question, let me answer it, because it's going to be a theme that's going to be evolving over a period of time. We have two coverages over there. I think we discussed one, that is PG Electro Plus sometime back, and CG Power. So let's look at it from a longish kind of a time horizon. Don't try to trade into these trends.
Okay. Before we thank you, sir, on the auto space again, one key stock that I wanted to discuss with you, that I should have discussed earlier, was Tata Motors. Because yesterday we've seen, the passenger vehicle business now reflect its own valuation into the stock. Currently, it's trading at around 395 odd levels, so flat trade right after opening yesterday at 400 odd levels. The CV business yet might take over a month to get listed separately. How are you looking at now Tata Motors, which will have two stocks soon on the stock exchanges, and what would that mean for investors? How should they go about looking at this opportunity?
So let me answer this question without creating any kind of confusion, especially with respect to the compliance related issues. So, day before yesterday in the history, and time and again when we have talked about Tata Motors, I have mentioned about that we have a positive coverage. We continue to have a positive coverage. We have a hold recommendation. The process of dividing into two different entities, my understanding is that it will allow a very significant business strategy to be put in place for synergies to evolve over a longer period of time. While commercial vehicle business is definitely doing well and is likely to do well, passenger vehicle business, because of the premium segment of JLR and the recent cyber attack, etc., and the global numbers looking a little bit subdued, there is a little bit of top heavy feeling. But flip side, if I have to look at a positive, I think the domestic brand, that is Tata Motor PVs, four-wheelers, are doing extremely well. And they are likely to. I think we are going to have some 3 or 4 launches in the next, I think by this month end or maybe next month, November, from Tata Motors. So that should be, including, the erstwhile new avatar of Sierra is going to come through. I happen to have a look at the picture. I hope if it is like that. It's a significant, and they've got 3 LCD displays in the front. To cater to the different features of the car. I think quite a significant new avatar launch in form of Sierra. So I think if you are a long-term investor, wait for these things to, get rolled out at ground level, and we'll take it forward.
Okay, fantastic. Thank you so much, then, Mr. Shah, for being with us on the show and helping with your insights across
Thank you.
segments and sectors that we've discussed. It's always a pleasure to have you with us, and we reciprocate our wishes for you, for your loved ones, for your family members, your teammates, for a very happy and a prosperous Diwali and the new year ahead. We'll see you around to talk in the new Samvat now. Thank you so much for being with us.
Thank you. All the best, Sakshi. Thank you so much.
Thank you. All right, viewers, we'll now move forward. It's already the first 15 minutes are out. You can actually see that the markets are gathering some momentum. 25,263 is the current level, about half a percent higher. Let's also welcome another top guest on our show. We have Mr. Kranti Batini joining in, Director of Research at Wealth Mills Securities now. Warm welcome to you, Mr. Batini. Good to have you with us. It was good to speak with you yesterday as well and back again today. Tell me, what exactly are you looking forward to now? We are just about in the last 1 week off in the run up to Diwali. What is actually on your mind? What should investors be focused on?
Yes, actually, markets have been stabilizing, trying to gain some kind of a strength in the range of 25,000 levels of Nifty. Sustainability is the crux for the market. As long as the Nifty could able to sustain this level of 25,250, this range, the medium to short term direction of the markets are in a positive territory. But right now, the one of the key concerning area for the market is the results momentum. That's where the valuations will make the margin of safety high in the market in the medium to longer term perspective. When we get some kind of a support from the results, that can be the kickstarter for the new highs for the markets. Till the time the markets would be in a range bound at this point of time, the liquidity is quite strong. Look at the kind of strong liquidity that what we witnessed in the primary markets that can bound to give the support to the markets for the secondary markets also. That's where the support zone is emerging for the market. By and large, the global cues are at this point of time. They are neutral. They are not negative at this point of time. If we can crack a good trade deal from US, that can give a sentimental boosters for the investors, especially for the foreign portfolio investors who have been slightly skittish with respect to India and US relationship. That has been become a speed breaker for the foreign portfolio investors. Even in fact, the long only investors who have been quite strong long only investors looking at the Indian investments, they are also wait and watch mode at this point of time. That's where the skepticism is coming in the market in the medium to short term. Once we get these kind of a global positive news with respect to the trade deals are concerned, that can pave a strong path for the next leg of the bull rally.
Okay, fantastic. Mr. Patini, let me ask you to help define for our viewers over the next course of the new Samvat. What should be the strategy for investors if somebody is just starting out now? Last 1 year, of course, has turned out to be a lackluster one for the markets. But most of the experts now pencil, since we have already underperformed Asia, underperformed the developed markets, this may be the right time to now look at the equities, and we could be looking at a much more positive kind of an upcoming year than what we have had thus far. So looking at that kind of an optimistic outlook that most experts have at this point, what kind of a strategy would you define for all our viewers in terms of how to look at the markets, what kind of stocks to have in amongst large caps, mid caps, small caps, where should one's focus be? If one is to take the mutual fund route, what kind of sectors or specific mutual funds should one be really looking at? Where can the alpha get generated in the markets?
Actually, despite of the consolidation last 1 year, the good news is market could able to hold on to the level of 25,000 level. That's a fantastic good news for the investors. Despite of the unprecedented selling from the foreign portfolio investors, Indian markets could able to hold on to these levels. That's a great news for the investors in the market. But coming to the outperformance, because see the narrative has been changing. There was a narrative a couple of months back, sell China, buy India. and that narrative turn out to be sell India, buy China. That narrative will be turn out to be let's sell emerging markets, go to US. And so the pendulum has been swinging very fast during this phase of the global reset at this point of time. So Indian markets, we never lost the growth momentum on the longer term perspective. In fact, the Indian market last 1 year, it could able to sustain, and we have witnessed the brokerages and rating agencies upgrading the growth prospects of India. So the long term growth outlook is intact. But what is missing? The earnings momentum in the medium to short term, the growth, quarter on quarter growth has been missing. Uh, this is because of the global uncertainty. We also need to understand the what kind of changes that are taking place with respect to the global political, geopolitical affairs are concerned. Despite of that, Indian market could able to hold on to the levels, and we can't compare Indian market with the frontier markets because the dynamics of the is frontier emerging markets and Indian
Sure.
markets are different. So coming the last 1 year, nobody expected if I last somewhat if I come on your show and tell, okay, don't buy equities, buy silver and gold, people would have looked at me as a fool. Okay, of course, I could able to convince my wife and bought some silver. So
Yes.
that turned out to be, and even in fact, when I told to my some of my friends, they looked at me as fool. What is this guy is talking about? But sometimes we need to take some kind of a decisions. Okay,
Contrarian view. Yes.
at the
Yeah.
initial stage, it looks kind of a foolish. But coming to your point, going ahead, I am pretty much confident Indian markets are going to outperform because of the despite of the trade tariffs, market could able to hold on to these levels. That gives renewed confidence on Indian market. So one need to be stock specific at this point of time, sector specific at this point of time, and what I am buying in stock markets. That is extremely crucial in these kind of market. I'm not buying stock market, I'm buying a company. So restrict myself what's my company is doing, how their cash flows are going to turn out, and what kind of implication of the geopolitical environment and also the domestic macros are going to have impact on my company earnings and cash flows. That's where the investors need to look. Even a fresh investor who is coming onto Indian markets at this point of time, don't get into exotic things in the market. Keep your strategy as plain vanilla investing. Stick to the companies what you are
Correct.
investing. If you could not able to understand all these volatile nature of the market and geopolitical issues, stick to any large cap diversified mutual fund. Even again, people are trying to experiment with exotic mutual fund kind of a profiles. Stick to the plain vanilla kind of a strategies will
Okay.
help the investors to outperform in this kind of market. And coming back to the direct equity strategy is concerned, select some large cap companies which offers good margin of safety, and mid and small cap companies where the valuations looks attractive. Of course, in this kind of market, chasing for value is a difficult task. I can understand, but still there are companies offers decent growth going ahead also.
Okay, Mr. Batini, let's talk about the IPO space as well. We've seen stellar performance on the listing of LG Electronics yesterday. The big question is that should one, those who have not got the allotment, invest in the listed realm after seeing a 50% premium listing on day one? The stock continues to move forward, a percent higher even today. In fact, what we are given to understand is that the listing has coincided with the company's announcement of its new essential Essential Series product range, which brokerage house Emkay Global believes will help LG expand its reach and accelerate its growth trajectory in India. Now, Emkay Global is of the view that the Essential Series of LG marks the company's foray into mass premium segment, and the move is likely to expand its addressable market of about from about 85% to nearly 100% now. And the new lineup is going to be seeing essentials starting from 18,000 odd levels. So more affordable, mass segment focus as well for LG. How are you looking at that?
Uh, Sakshi, we always discuss about the consumer demand in India, where it's
Yeah.
reflecting on stocks. So finally, we could able to have a
Yeah.
proxy for Indian consumer demand. Sakshi, there would be a home, every home somewhere directly or indirectly they would be related to LG product. So that's where the LG could able to gather the momentum at this point of time. Look at their strong earning profile and margins. Coming back, when a stock have a stellar listing with a 50% premium listing on the day one itself, the listing gains. Given the kind of the market mood at this point of time, sentiment at this point of time, I tend to take some profit from the table. There would be a time, some kind of a the exuberance and euphoria will cool off post listing. That's what we witnessed in many of the recent IPOs. LG could be an exception, but when any stock gives a 50% listing gains, better to take some profit from the table, wait for some time. There would be a better price to make a re-entry. But in terms of the long-term prospects of LG Electronics is concerned, I would be buying LG Electronics at every dip in the stock. So I don't compromise. I don't get feared to buy the stock at any dip. When there is a blood on the street, the best stock to buy right now is LG Electronics. Given the kind of strong consumer-centric business they are in, and this is the stock to look at, proxy to the consumer growth story in India, and also this is the stock, one of the stock for the demographic dividend in India.
Absolutely. Well, there's a fantastic take and a clear take from Mr. Patini coming in on LG. For those who had the questions, I hope this insight will definitely help you out, clear your mind, and find out what should your strategy be on LG in case you had the allotment, or if you did not get the allotment and are looking to invest in it in the listed realm as well. You did talk about the earnings, sir. So lastly, I want to understand from you, from the IT sector earnings that we have got thus far, TCS, HCL Tech, we've also seen Tech Mahindra persistent now. How are you looking at the IT sector post some of these earnings that have come in, and where are you likely to see outperformance first start, even if not immediately, maybe in the near to medium term as well? Large cap IT firms or mid cap IT firms, and what would your suggestion be on the IT sector amidst earnings?
Yeah. Sakshi, it's a very difficult one to answer, but I try to answer your question. It's a right question at this point of time. Investors have that question at this point of time. Sakshi, if my risk appetite is less, and if I'm a long-term investor, the long-term in the sense, okay, not 3-4 months or 6 months. If I have a time frame of 2 to 3 years, I definitely stick to the large cap IT companies. Given the kind of the long-term average, these stocks are attractively priced at this point of time. In a very staggered manner, I try to accumulate the large cap IT companies. It's a contrarian buy. The US administration is quite positive with respect to the US economy coming on track, and the extraordinary performance they are expecting from US economy. If that is going to be the true, Indian IT companies are well better placed, and the valuations looks very attractive, because end of the day the US companies are going to increase their IT budget, which are going to have a positive impact on Indian IT companies. But in the medium to short term, there would be some kind of a noise here and there. There would be blips in the journey. And if my risk appetite is little bit high, so I would be getting into the mid-cap IT companies, depends upon the domain they operate, the geography they operate. This is the best time to get into a mid-cap IT company. So it all depends upon my time horizon and my risk appetite. But by and large, with respect to the valuations are concerned, they are nearer to the long-term. They are at the long-term averages, which gives a good entry point for a longer-term investor. For medium to short-term, there would be heightened activity and volatile with respect to the IT company and IT sector, IT as a sector.
Fantastic. Thank you so much then, Mr. Vatini, for being with us on the show and helping our viewers out form a clear strategy for the new Samvat, identify the pockets of opportunities for them as well. And thank you so much for always being with us on the show and guiding our viewers.
Thank you, Sakshi. Always my pleasure. And season greetings.
As well as your team as well at Wealth Mill Securities. A fantastic upcoming, happy, prosperous Diwali. We'll see you now in the new Samvat, sir.
Thank you, Sakshi. God bless you. Thank you.
Thank you. With that, viewers, we wrap it up on that note. 25,226 on the Nifty, 0.3% high in trade, tad bit lower from the high point that we witnessed in the first half an hour that has panned out. Remember, yesterday, also, we had seen a lot of volatility in trade. We had seen a broad-based sell-off. The markets were unable to sustain above that 25,150 odd mark for the last three sessions. Now, it remains to be seen that now that we've climbed up above 25,200 right in the opening, will we be able to sustain it till the closing hour as well? So we'll keep you posted with all the market moves. You should stay tuned with us. And of course, if you have some questions about the stocks in your portfolio, ask them on daily calls at 12 noon with market experts guiding you on your Diwali specific trading strategies as well. Stay tuned with us. Welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our festive special conversation. It's been an unprecedented rally for gold and silver thus far, and all eyes are now on finding out what really comes in next for these precious metals as well. Now, to decode what the surge has been all about and what